So, building a portfolio involves forecasting where you think you are in the cycle.
Absolutely. Absolutely, because if you don't understand where you are, I'm going to quote something where the future is independent of the past given the present. What does that mean? I'll say that again. The future is independent of the past given the present. So forget about looking back 20, 30 years. Understand what's happening today. If it's raining today, it's more than likely going to be raining tomorrow. If it's sunny today, it's more than likely going to be sunny tomorrow. If you've got high inflation, you're going to have high inflation tomorrow. So inflation, growth, they trend. There's this autocorrelation. That's the technical term, but they tend to trend. So if try and understand where we are in the cycle, you'll have a better idea of where assets are going to go.
I'm talking to Dr. Alan O'Sullivan of Priya Wealth Management. And one of the things you're saying when you're trying to build a portfolio or get an investment strategy for a client, an investment management approach, is the sort of scientific approach of the history of finance. Tell us about that.
Yeah, so I think what's very important is that we start from a place of humility, okay? The more you try and understand financial markets, the actual more you realize you don't understand, okay? And what I mean by that is most of the analysis of where equities, bonds are going to go in the next 10, 20 years are framed of the environment in the last 40 years. But that environment is a poor sample size for a number of structural reasons. We've had globalization, right? Cooperation on trade. We've had a peace dividend for 40 years post Cold War. We've had a fall in interest rates. So interest rates went up to 20% in 1982 when Volcker raised interest rates. We've had a disinflation environment, what Bernanke called the great moderation for the last 40 years. That has been a tailwind to both stocks and bonds. That's all gone now. We've got normalized interest rates. Interest rates are not going back to zero. We've got normalized inflation, and we've got a world that's on fire, frankly. And the threat of nuclear war is no longer even low single digit. It's probability. So it's a different regime. The rules have all changed.